Hey everyone, welcome to Alpha Insights. I'm Asher, and today we've got a market snapshot that's equal parts cautious and a bit spicy.
And I'm Allison. We've got Fed moves, tech fireworks, a wobble in energy, and small caps acting like they're on a roller coaster. So buckle up.
All right, let's start with the big picture. The Federal Reserve. The Fed signaled a cautious approach to interest rates after some mixed inflation readings. To me, that says they're not rushing to raise or cut. They're waiting for clearer signals.
Exactly. And what I find interesting is the phrase cautious approach. It usually means the Fed wants to see consistency in inflation and jobs data before making a big move. So markets are listening closely to every headline.
Right. In plain terms, investors heard, "We're watching," rather than "We're acting now." That keeps the options open, which can be calming or frustrating depending on how much risk you want.
Totally. And that uncertainty shows up in the rest of the market. Technology stocks rallied after some strong earnings reports. Companies beating expectations tend to pull the whole sector higher.
Tech's rally makes sense. When earnings beat, that gives investors confidence the growth story still has legs. It also reminds traders that corporate profits can sometimes outweigh macro worries, at least in the short term.
But it's not all sunshine. Energy shares slipped. That could be profit-taking after a run-up, or it could reflect weaker demand signals. Either way, it's a reminder that sector leadership can flip quickly.
And that flip is exactly where small cap volatility comes in. Analysts are noticing more swings in smaller stocks, which are usually more sensitive to shifts in investor appetite and economic cues.
Small caps often lead on risk-on moves and lag when investors get cautious. Increased volatility there can be an early warning sign that sentiment is changing, or simply traders chasing short-term opportunities.
Let's break that down a bit. When the Fed is cautious, big, stable companies, like many tech firms, can still do well if their earnings are solid. Smaller companies, which depend more on domestic demand and financing, feel every tremor in confidence.
Nice explanation. That also ties into the mixed picture in healthcare and financials. Those sectors showed mixed performance, which isn't surprising. Healthcare can be defensive. Investors flock there when they're nervous, while financials are tied to interest rates and credit conditions.
Exactly. If the Fed is on the sidelines, that muddles the outlook for banks. No sharp rise in rates might limit net interest margin tailwinds, but stability reduces the risk of sudden credit stress.
So, what should listeners take from all this? First, watch Fed communication and incoming inflation reports. Those are still the main drivers of policy expectations. Second, earnings season is still very relevant. Strong company results can move sectors independently of macro headlines.
And third, be mindful of market structure. Increased volatility in small caps means portfolios can get choppy quickly. If you're allocating to smaller companies, expect bigger swings and make sure your time horizon matches that risk.
I would add a practical tip. Don't overreact to one day of moves. The Fed's cautious stance means a lot depends on the next set of data. Use pullbacks to check fundamentals rather than chasing headlines.
Good point. And remember, tech rallying on earnings shows that stock selection still matters. You don't have to own the whole market to capture gains. Focus on companies with clear profit momentum.
Totally. Okay, time to wrap up. Let's sum up our key takeaways together.
First, the Fed is being cautious. Watch inflation and jobs for the next clues.
Second, strong tech earnings are driving gains, but energy and other sectors can move independently.
Third, small cap volatility is up, so expect bigger swings there and match your risk tolerance.
And finally, healthcare and financials are mixed. Remember, sector-specific dynamics matter as much as macro headlines.
That's Alpha Insights for today. Thanks for listening. Keep your questions and market stories coming.
See you next time. Stay curious, stay calm, and keep an eye on those data releases.